Hey, good evening, everybody. Welcome back to another session. I hope you guys have been busy this week. Crazy swings in the market still. Just a reminder the session is hosted every Tuesday and Thursday evening at 10 p.m. Eastern. So if you haven't already, or if you want to share with some of your family members or any friends, feel free to do so. Now, let's give 1 second. Let me share everything. Okay, all shared. All right, let's get started. So let's take a look at what's happening in the market today. All right, as we always start, let's start by just looking at the heat map of what's happened today. So to me, at least, I see a divide today, sort of just like right down the middle. Right, you see this? This half is red. This half is green. Right. Consumer staples, right? Industrial energy, real estate, utilities, materials, a little bit of healthcare. Then you have your stuff like consumer discretionary, that's red, communication services, information technology, financial too. Financials, there's some stuff in the financial that's red today, some stuff that's green. So overall, sort of flat market, right? Just from the look of things. But let's take a look at a chart to see if it really is. So looking at SPY, right, on the daily, we're still at the top of this channel, right? I thought it would fall, but as you can see, it doesn't really, the market just goes on its own. But this is an opportunity. See, so if you know that there's this channel here, and we are basically near the top, right? So this area is still near the top. The risk to reward here is still pretty good if you're willing to take a risk at shorting it. So right here, still pretty good. Right? So right around this area, we're looking at if we were to get into a position here, so 432 or near 432 to 430, good entry. Stop will be somewhere right in here. It's around 443, 444. Not too bad. Right. So about $10-15 risk here, but you're playing for this downside. So this is a more of a swing trade setup still. So very good. You play for the down swing to the downside. At the very least, this is the target right here. This level right here. So 410. And if you can get below 400, that would be pretty good. Right? Just based on this channel. So you're playing the top and the bottom of this channel. Right? You can long at the bottom, you can short the top. That's how you would play it. Right? So that's what's set up. It's still good. You see, still good time to get in some shorts. And since we don't know how long it's going to take before it will fall, you don't have to rush into your full position, right? Because you can always average down a little bit. So say if your position is 100 shares, break it down. As you can see, and a fine example of that is this right here, right? It's about 2 week cycle before it really went down. So in this area right here, multiple times that it touched the top of the channel or it came close to it, you could have gotten in. Right? So you don't have to get in all at once. And remember, if you if you don't have to, don't get into any position that is time sensitive. So meaning options, right? If you don't have to use options, don't use options because options, they decay with time. So you don't know when this will go. And if you're just sitting in 2 weeks where you're basically giving back money to the market every single day, it's a pretty bad trade, right? But if you were on the other side and you were selling, it could be a very good spot for you, right? 2 week cycle where it didn't break above here, and you say you were selling calls that were above 440, right? You were selling above 440, and so for like 2 weeks, you could be collecting, and especially on SPY, you have expirations on Monday, Wednesday, Friday. So 3 times a week, you could basically just collect money, right? Collect premium just for selling, right? And the reason why it's a better play than just buying outright buying is because every day that the contract decays, it's another day that you're gaining money, right? So over time, and it's a lot to me, it's a lot simpler to play because you're basically just taking a bet that price will not go above 440, right? Or any strike above here, right? The further away from this channel, the better, right? 450 or something, 460, but you gotta check to see if there is some premium on it, right? So it's a trade that's not time sensitive. But if you are long some options, it is time sensitive. You have to get the timing right, right? So you might have to be like do a month out at least if you're playing on the daily and using option on the daily, right? So just buy. We're at the very top of it. You can see where we've been just sitting here, right? So it could go down a little bit, but likely it's gonna stay here for a little bit before maybe we make that drop here, right? Similar to this right here, with this, then we drop, then bounce back. Right? That was a hard drop too, and it bounced back. So watching for this kind of movement because we've seen it here too, right? Boom, and things you see, things like to sort of repeat. Then it's not exactly, but it will be very similar, right? And all we could really do is just look back and notice it, right? So notice that pattern and notice what it does. Now, I'm not saying that this pattern is going to be permanent. All I'm saying is we got to keep an eye on it, and if it holds, you can make a lot of money noticing that pattern and noticing that the pattern is repeating. So keep an eye on it. Right? Diving down to the hourly. So we're still seeing that on the hourly is the same setup from before, right? So let's go back 90 days. So this kind of behavior after a drop, it sort of does this, where the 50 goes, it stays in this area. It sort of goes above and below. So price is just fluctuating on every now and then, right? So times like this, it pays off being a day trader because you could take advantage of the price moves. You don't really have to pick a side. Just go with whatever the day is given to give you. So just take a look at that, right? And we can sort of see a channel right here, right? You see this channel right here? Now, if you're playing, if you're a day trader, right, let's make the bottom channel a little bit better. Bottom channel is like right here, right? You're a day trader, right? This is where you're loading in shorts. This at the very top here. So wait for another pop-up like this to add in a short. Or if you're even shorter time frame, then you should probably be down at the 15 minute chart looking for setups there because it's going to look completely different from the hourly and the daily, right? So still the same setup. See the charts don't change too much. You know, there is a lot of volatility, but it doesn't change too much. There is still some trend in the market, or it's starting a new trend, starting a downward trend. Okay, so let's take a look at AMD. So you can see AMD has actually started to go down. Let me drop there. Right. So this is the channel. Right. So AMD, right, Tuesday it was here. Right? It's still there, still hanging on to the middle, but it did give you another chance. So whoever was paying attention to AMD, it did give you another chance to see it popped up a little bit beyond the midway of that range, right? So that if you missed that chance on Wednesday to short, right? Short at the top, or like I was mentioning, as close to the top of this range as possible. So if you missed it on Wednesday, it's not a good time to short it yet. Right? Hopefully it comes back for another test to the top. You can see it's actually making these lower highs too. So watch for that, because the next drop could go down to here again. So down here, we're looking at somewhere below 100 this time. Right? Yeah, below 100. Because it did get it here. The reason why I didn't draw the bottom channel covering this also is because this is such a crazy move that it doesn't encompass the other price action. This is probably what I would call an oddity, right? Right. So, but it does set it up for this as being support next time when it comes down. And if it does break this, then we could probably even go even more. Ooh. Let's get my chart back. Yeah. So if it breaks this right here, it can go even more. So it breaks 100, breaks down below 100, any significant amount, it could probably, it'll just drop it. So pay close attention to it. I think it's I wouldn't short it now. It's at the middle of the range. And if you didn't pay close attention to it on Wednesday, you probably missed it already. So looking like this, it could be a continuation. Right. You can, especially on the hourly, you can see these lower right here. This was the highest it got in the last 2 weeks, and it hasn't been making any new highs yet. Or it hasn't even been testing the new high, the old highs. So the next one, maybe the next one just peaks like right here. Right, so that's sitting around 116. But we're still waiting for that continuation. So this one, right? The continuation down. So this is the start. This right here, price action right here, is like the start of the bear flag, the next bear flag, because this was a bear flag already. This here was a bear flag. This is the start of a new one. That's what it looks like to me. Okay. And I don't know if I went over this with you guys, but I don't. The reason why I like to look at the stocks I do is because there's a lot of these are blue chips, and they have a lot of liquidity, meaning it's very hard to manipulate them, right? So the market has to really all the traders, all the market participants playing these stocks, they have to be thinking the same thing. And when something like that happens, you get a stock that really follows their technicals. right? Because technicals only work if multiple people are looking at the same thing and are paying attention to the same thing, right? That's why price trends, right? So Apple today looked like it was at the very top of that channel. See right here, very top of that channel, right at around 168. It did start dropping post market in the after hours. Right, so good time, still very good risk to reward here, especially for swing. And again, we're catching these this fall, right? But it'll probably do this sort of thing again, where it stays like right here and then drop, right, for the next drop. So if it follows this, then it wouldn't be that significant. But I think that drop would probably break the last low by a little bit. So right in here. So you're looking at something that's below 150 at the next drop. Right. Price action is confirming this channel. So it's a good channel to look at. So tomorrow and probably the next few days, the thinking that is it's gonna hold this close to this the top of this range and drops. Unless market conditions change. Right. Because if something crazy happens, for sure the market, everybody participating in the market is going to change. Now, I would love for the market to start rallying again, but we'll have to see. And one thing to be very careful of is that was it March 14th is the FOMC meeting, right? So there's going to be a lot more volatility following or around that volatility, that time, right? It's going to be even crazier. And March 14th is not that far away, right? So zoom in. March 14th is in 2 weeks. In 2 weeks' time. So drawing this channel again. So March 14th is right here, right? So what it very well could do is price just stays in this right here, range right here, and then March 14 comes is when it starts falling, right? After March 14, maybe it makes a new low. And then it goes back up for a little bounce. But my thinking is that it'll stay in this channel. So that's one thing to look for. March 14 come. This is FOMC meeting, right? Feds meet about rate increases, what they are thinking the economy is going to go or what's needed, right? Talk about the things. So that could very well be the case. So maybe we won't see a huge drop, but we'll see a drop. Right? And that's just confirming from price action at the moment. Unless we get something like crazy, they change their mind. They say something like if they say something like this year we were expecting like 3 or 4 rate increases, but we're probably just gonna stick to 2, right? Or something like that, something crazy like that. But it's very unlikely, right? To the hourly. So hourly, see this right here? Basically a repeat, right? Look at that. If you guys are seeing this, right? Looking like it's a repeat. So we're seeing this sort of thing again, right? The first dive down, bounce back up, held for a few days, then fall again, back up, and fall again, right? So the pattern is repeating itself, right? Once, twice, maybe the third time, right? Hopefully you guys are catching on to that. You see, it's not too late still. You can get it. It's even though that first red candle is there already, it's not too late. You could set a stop like right here if you get in, or if you want a bigger stop, set stop up here. That's a good one right there. So the 1, 2. Okay. Even better is if you look at this support right here, right? It's been holding this, right? Tomorrow. And this is a momentum trade. So if the momentum tomorrow continues down, you set a buy or a entry to a stop entry to get in at this level or below this level, and you set a stop in this right here, right? So entry below here, and you set a stop here, right? And that's a momentum play, right? You're playing for the momentum downwards, and you try to catch as much as you can get. So that's a momentum play right there, right? To start the momentum down. But that stop is there just in case the momentum doesn't carry it down far enough, right? Because you can see here. So an example of a momentum when you want a momentum play, right? Like somewhere right here, right? The moment it breaks this right here, you want to set stop somewhere up here. And that momentum, if that momentum continues, you have a great play because you see this right here. This was your risk getting into that position, but this was your gain, right? And you rolled that for like what, three days, even 4 days if you got out exact bottom right here. But if you didn't, you just got out at the third day right here, that was still a very good play, right? So that's a momentum play. So the type of momentum like that, right? So if you, it might be better just to do that, right? So not even getting, but if you like to do what I do and just like set, just getting your position, set a stop where market structure breaks, right? Like up here, a bigger stop, but you could let it run more. It's more hands off. But the momentum trade, you can really catch it, right? Because right here, this right here at 162 or below 162, so like maybe 160 would be better entry. And then you're setting a stop right above here, so at 163, so $3 risk, right? And you're trying to catch it on the swing down, right? So 150 is out, so that's a $10, right? $3 risk, $10 reward. So that's a great play, right? You're getting about almost 4 times your risk back, right? So you're getting between 3 to 4 times your risk back in that and on that momentum trade. Okay, well, that's a good trade. Well, your risk is a lot lower than what your potential gain is. Okay, so that's Apple. I see a good setup on Apple. Right, good setup. Let's look at AMD. Oh, not AMD. Nvidia. So let's draw our range again. Right. All these stocks are doing basically the same thing. So if we're following this channel right here, so this is still good time to add in for that drop. Right, the next drop, going to FOMC, right? We could sideways, right? Sideways right here, slowly inch down, and then boom, FOMC comes, and drops, heavy drop. That's my thinking. But still, it's a good time to position yourself. Okay? Especially if you don't know, then you slowly add into it. You never want to add into your full size yet. It allows you to have a flexibility of just in case anything changes in the market. So on the hourly, you see that it's similar to Apple. right? Similar to Apple. Let's look 90 days, right? This was the longer drop. So consolidation right here before it starts to drop again, but it's going to drop in stages, right? So boom here, first drop back here. This is looking like it's another leg down right here. And so same play as I was just talking about on Apple, another momentum play, right? Set it right here. Set your entry. So maybe $1 or $2 down from here, right? So let's see. That will put us at about 228. So 228, you open the position. You set your stop at let's see, right here, we're about 230, 230, 232. Right. So if you do 230, that's $2, 232, $4, right? For that potential to go down to 206 or 200 again, right? To try test 200. So about a $28 drop, right? So that's pretty good. So if it goes all the way to 200 or close to 200, that's $28 reward for a $2 risk, right? So that's more than 10 times. That's a 10x play right here, right? If you set your stop at 30, but then your chance of getting stopped is probably higher at 30. But if 32, right? 32, you basically just take 28 divided by 4, right? So however much that is, I think that's like 8 times. So that is equal to an 8x, right? But if you say you stop at 230, that's a 10. It's basically over 10x right there, right? So it's a quick little place like this. I definitely think that this is worth the risk. Because you see the risk to reward is the risk is a lot smaller than rewards, and that's the kind of place that we are looking for, right? Big rewards, lower risk, because then you could take about 3-4 losses in a row, and one win will basically make up for those losses, right? I say you only play like 2 or 3 trades a week, then your chances of blowing up is basically impossible, right? So it's a combination of risk management, looking at setups, and picking good plays. Okay, that's how you're gonna win in this game. All right, let's take a look at Tesla. Tesla dropped today too. This week I've been pretty busy, so I haven't been able to pay attention too closely at the market when things was dropping. Let's create a new drawing set. Let's call it blank. So it's blank. But even though it dropped, it's still not too crazy, right? The reason why I'm not including this right here is I think this wasn't really the start, right? Because if we were to start with this right here, this section right there, the channel would look like something like that, right? Which is still a valid channel. It's a bigger channel. But you could play it both ways. You can play both ways because this is still respecting that channel. So just however you see it, right? So it's still good. We're still close to the top of the channel. The thing with Tesla is it has such a wide channel, right? If you look at the top and the bottom, right? The top of the channel is like 900. The bottom of this channel is close to 700. Right? This is basically a $200 channel, right? 700, 800, 900, right? $200 channel. So if you just say example, you short 1 share of Tesla, right? At the very top here, you short 1 share of Tesla, right? And just a play for a week, or not a week, but a few weeks, right? One share of Tesla, you got it here, and let's say you got it at market price right now. So market price is about 820, right? You short it at 820, and you're shorting it down to 700, right? So you're gaining $120 gain right here, and you set it. And since you're only shorting one share of Tesla, you can set a stop like somewhere up here, right? Some high place up here. So this is at 950, right? So basically, so this is 80 right here to get to 90, to 900, and then uh 50. So that puts it 130, right? But that's bad. That's a pretty bad trade-off, right? But if you're just paying attention to it, just one share of it, that one drop, right? So that's but we could set that's with a stop that's like so far out there. You see that the stop is way out of this range. But if you see that this was a resistance right here, or even here, it couldn't break above here, so 900, and you got in at 820, right? So you got in at 820, that's $80, and you're playing it down to 700 is right here, right? 700 is right here. But you could potentially get it all the way down to 600 if you want, because the bottom of this channel is here. So if you play to 700, then that's 120, right? So it's a little bit better than 141. But if you play it down to 600, then it's about 220, right? So you're a little bit over 2x. But just one share, if you were to just short one share of Tesla, right? You have that potential to make like 120 or 220, and on the losing side, maybe you lose like $80, right? That's if you set it at the stop at to get out at 900, right? So I think that's still a okay trade, but that's a one for one trade. So you might not like that. What you would probably want to do is get it as close to the top of that range, right? Right now, even though it's still close, in terms of things, right? It might be better to just wait, because if you wait it out, it's not going to do a straight fall, right? You see this move right here, it wasn't a straight fall, it sort of still came back to the top, right? So if it stays to the top of this right here, you can get it closer to about 850. So from 850, right, entry just one share, shorting one share of Tesla at 850, right? And you're setting a stop at 900, right? So this is stop. This is entry. And the target is there 700. This is the first target, right? And then 600 is the second target. So whichever one you can get. So this right here is $50 right here. $50. And for 50, well, not 500, $50 for a chance at 700, which is 150, right? So 150, and then even at 600 is 250, right? So your risk to reward is better. So wait for that 8. Wait for that, right? Clear everything. So I have somebody request me take a look at Facebook. Okay, let's take a look at Facebook. And thanks for tuning in, and thanks for asking. All right. Now Facebook has just been straight up murder, right? But it looks like there is some support somewhere right here at the 200 mark. It's still holding 200 really well, but let's see. On the daily, it looks really really bad. There's not too much to go off of, because it's so far removed from this that we don't know what's gonna happen. For sure, this is a very bearish sign. At the moment, the daily is not gonna show us anything useful. But let's look at the hourly. Now looking at the hourly, how I would play is I see it's so tight right here. There's two ways you could play. You can pick your poison, right? So this range, it's basically sitting sitting above 200 and between 200 and 210, right? So you're picking your poison. So if you want to short, try to get it as close to 210 before you open a short position. If you want to long, I would probably not recommend longing right now. Maybe catch it down to 200. Or if you want a momentum play, watch for that break of 200, right? Catch that break of 200. Maybe set a stop entry for 195 and set your stop for 205, right? So give it a $10 buffer. So that $10 window, just in case it likes to whiplash, right? So 205, so $5 to 200, then 205 here. So that gives you a $10 buffer, because what you're going to be playing for is the next huge swing down to break this low, right? This low at 180, because we've basically Facebook has just entered into a free fall, right? It sort of caught some support right here, but it's very tight, right? We're not really sure what's going to happen, but more than likely it's probably going to fall some more, right? Fall some more. So if you're a swing trader or a quick day trader, you could catch that for that momentum, right? But just off the daily, there's really not much to go off of on the daily, right? We can go back as far as like 5 years. So we're basically back to 2020 lows, right? Back to 2020 lows. Right, and that's or close to 2020 lows, so 2020 middle. Right. So it's pretty crazy. So that's how I would play it. Dive down to the hourly, use the hourly, because the daily is way too crazy at the moment. And so you have basically two options: or short it when it gets to 210 again, right? But you're gonna have to wait, or a momentum play and short it when it goes to 195, right? Then you say stop, right? So that's two different ways you could play, right? Just all based off your risk and risk tolerance. All right. So if I don't see any more requests, but hopefully that answered your question for Facebook. Uh, it's a pretty crazy stock right now. So, um, but with that, like half hour is up. Thank you everybody for tuning in. Hopefully this has been helpful to you guys. And today is Thursday, so tomorrow's Friday. Be careful on Fridays. Do not open yourself to any unnecessary risk over the weekend, but trade profitably. And I hope that all of you stay safe. All right. Until the next time, have a good one, everybody.